Hi, Lenore here. I want to go over the information for our practice for exam 1. So here we have an unadjusted trial balance, Emily's Emporium, January 31, and this is her unadjusted trial balance right here. And unadjusted means that all we've done as accountants is the daily information for the entire month. So this is our summary, and now we need to actually do the adjusting entries. So this says to show them in T-Accountant journal form. The exam only requires journal form, so that's what I'm going to do, is just the journal form. Now remember, you absolutely have to write the journal entry in your blue book. I'm not going to look at your worksheet, and that's what this is. So, consulting services in January, $2,300. That's coming out of this account. This is the liability account. And what it's telling us is from this liability account, we're actually earning $2,300 to add to here. So first we do the journal entry. The debit is to unearned consulting fees, $2,300, and the credit is to consulting fees earned. And we write a little explanation. Let's see, I need to make certain that this is left justified. There we go. Now the next one, a portion of the insurance expired in January, $200. Where here's the premium, prepaid insurance. That means that it has value of greater than 1 month. So out of this amount, $200 has been expired. When you hear expired, you should think expense. So we're going to debit insurance expense for $200, and we're going to credit prepaid insurance for $200. Our explanation, insurance expired. All right. Our third one is income tax expense incurred but not paid for January, and we have a dollar amount. Incurred means that it is an expense in this month of January. So, because the relationship is not between the company and a vendor, we're not going to use accounts payable, but it is between the company and, let's say, the IRS. We're going to use income tax payable. So the debit's going to be to income tax expense, the credit to income tax payable. So let's write that up. Income tax expense in the amount of $2,400. The credit to income tax payable. This is a liability account, meaning we will pay it sometime in the future. Income tax incurred. You can use the words right out of the sentence. Now, the last one is office depreciation. If you remember, in class we spoke about if the asset is dying, like Professor Richelli says, we should remember dead. DEAD. The debit goes to depreciation expense, the credit to accumulated depreciation. So let's put that in. Depreciation expense and the credit to accumulated depreciation. The amount is $300. And let's call it depreciation adjustment. So now we have our 4 adjusting journal entries. And if you're using the worksheet, the best thing to do is to include these in these two columns here. Now, you'll notice that I left some rows empty. That's in case we have an account and we need a space for it. So let's work with unearned consulting fees. There's a debit, $2,300, and the credit is to consulting fees earned. I'm going to use my formula. There we go. So we put those two in. The next one is insurance expense. And if I look at my expenses, I don't have an insurance expense account. So I'm going to write that in, insurance expense. And you'll notice I'm going to put the debit in the two adjusting columns, the purple columns. I don't go back and put it in the white colored. So there's my $200. Just going to move up here. Prepaid insurance is a credit, $200. Now the third one is income tax expense and income tax payable. And I just realized I'm going to need another few rows, so I'm going to add it here. So income tax expense, I don't have that. I'm going to type it in. And the debit is $2,400, and I need an income tax payable. There we go. Now the last one is depreciation expense. So we need a depreciation expense account here. And we need an accumulated depreciation. Depreciation expense is $300. And there's a credit to accumulated depreciation. Voila. Now we're all done entering these adjusting entries into our worksheet. So I'm going to do a little formatting here. I'm going to make sure I have a double line, and I'm going to put in a formula. I'm going to sum this entire row of debits. So there's my formula, the entire row. I'm going to do the same for here, the entire row. Now, if these two don't match, don't go any further. It means something's gone wrong. Now that we have our adjustments all listed and we know the balance of the debits equal the credits, now we're going to carry over or net our other accounts. So, for example, cash, there was no adjusting entry, so I'm going to bring that over as a debit. Same thing for accounts receivable. Now, prepaid insurance, we have a debit and then a credit, so I'm going to subtract one from the other. Office equipment, brought over. Accumulated depreciation only has an adjustment, so pop that right in there. Unearned consulting fees, credit, less the debit, that leaves $900. Income tax payable, common stock, there is no change. Dividends, there is no change. Consulting fees, we have a credit and another credit, so we need to add those two together. Now we have our salaries expense, our utilities expense. There are no adjusting entries here, so I'm bringing them right over. And now we have the three that we added. Okay. I don't know what happened here, so I'll just make sure they're numbers. Now, again, I need to total my debit and my credit column. The sum of all my debits, the sum of all my credits. They match. That's a great thing. Let me help you with the formatting here because it looks just a bit funny. There we go. So now I've completed my adjustments, my journal entries, used the worksheet, and now I have an adjusted trial balance. And the rest of this problem, after you prepare your adjusted trial balance, is to prepare an income statement, the closing entries, and a balance sheet. I'm going to do that in another video. Okay, Lenore out.